For the longest time, if you wanted to invest in most cryptocurrencies through your regular stock account, well, good luck. It was like trying to get into the most exclusive club in town, a party that was pretty much just for Bitcoin and Ethereum. But guess what? The velvet rope has finally dropped, and the guest list is about to get a whole lot bigger. So why was it so hard to get in? Well, you can picture a top-tier club with a really strict bouncer at the door. In the crypto investing world, that bouncer was the U.S. Securities and Exchange Commission, the SEC. And for years, their list only had two names on it, Bitcoin and Ethereum. Everything else, all those other altcoins, were just left waiting outside on the curb. So under these old rules, the crypto party was basically a two-person event. If a company wanted to launch an ETF, that's an exchange-traded fund that you can buy just like a stock for any other crypto, they had to go through this super long, super uncertain approval process for each and every one. And just look at how long that took. Once an application was filed, the waiting game started. The SEC could take up to 240 days to make a decision, and even then, there was absolutely no guarantee of success. This huge bottleneck is the exact reason the crypto ETF world stayed so exclusive for so long. But that's all changing. After years of the market growing up, and frankly, a lot of legal pressure, the SEC has completely rolled out a new guest list policy. They have fundamentally changed the rules of entry, and believe me, it is a massive game changer for the entire crypto space. This slide right here shows the shift perfectly. The old way, it was a total mess, slow, uncertain, and everything was handled one by one. The new way is like a streamlined conveyor belt. Now, if a crypto asset just meets a set of predefined criteria, an ETF for it can get listed automatically. The bouncer isn't making subjective calls anymore. They're just checking IDs against a clear set of rules. So what's one of these new rules? Well, a really key one is this. The altcoin has to have an established futures market on a regulated exchange for at least 6 months. And this is a huge signal of maturity. It shows there's real price discovery and liquidity, which basically takes all the guesswork and subjectivity out of the SEC's decision. And with these new rules locked in place, that velvet rope has officially been dropped. The exclusive two-person party is over, and we are about to see an absolute flood of new guests arrive on Wall Street. And hey, this isn't just some theory. Look at the names that are now eligible to join the party. We're talking about major players like Solana and Cardano, and even viral sensations like Dogecoin. These are assets that tons of investors have wanted to get their hands on, but couldn't, easily do it through traditional channels. Now, that door is wide open for them to be wrapped into easy-to-trade ETFs. And it's not a what-if. It is already happening. Grayscale's digital large-cap fund, which holds a whole basket of crypto, including XRP, Solana, and Cardano, has already been approved for public trading. This is the very first multi-crypto product of its kind in the US, and it's proof that this new era has officially kicked off. The potential scale of this change is just staggering. Analysts are predicting we could see over 100 new crypto ETFs hit the market in the next year alone. And that includes funds for single altcoins and even thematic baskets, like ones focused on DeFi or NFTs. Okay, so what does this upgraded invitation really mean for your portfolio? Well, this change benefits pretty much everyone. For retail investors, that's most of us, it means you can finally get exposure to a huge range of altcoins right through your regular brokerage account. No more dealing with complex crypto exchanges or worrying about digital wallets. And for the big institutional investors, like pension funds, it gives them a clear, regulated, and transparent way to enter the market with confidence. But, of course, with all this excitement comes some new responsibilities. Just because access is easier doesn't mean the risks have somehow vanished. This quote from Matt Hugan over at Bitwise is the perfect dose of reality. An ETF is just a wrapper, right? Its success still depends completely on the quality of what's inside. A flashy new ETF for an altcoin with weak fundamentals isn't automatically a good investment. Doing your own research is still your most important tool. And the regulators totally agree that investor protection is key. ETF providers have to be transparent, they have to prove the crypto assets are being held securely, and the SEC is still watching over everything. The whole framework is designed to open the doors while still keeping investors as safe as possible. So as the doors to this massive Wall Street party swing wide open, the big question is still out there. Which of these newly invited altcoins is going to capture everyone's attention and become the life of the party? And which ones, well, which ones are going to end up as wallflowers? The next 12 months are going to be absolutely fascinating to watch.